The Elliott Wave Theory, developed by Ralph Nelson Elliott, is a powerful tool for analyzing financial markets. It suggests that market prices move in predictable patterns called waves. These waves reflect the psychology of the masses. Understanding these patterns can help traders anticipate future price movements. Elliott Wave Theory identifies two types of waves: impulse waves and corrective waves. Impulse waves move in the direction of the main trend. Corrective waves move against the trend. These waves are further categorized into 5 primary waves: 1, 2, 3, 4, 5 for impulse waves, and 3 corrective waves: A, B, C. The theory is based on the Fibonacci sequence, a series of numbers where each number is the sum of the 2 preceding ones, like 1, 1, 2, 3, 5, 8. These ratios are often reflected in the price and time relationships between different waves. Elliott Wave Theory is not a magic formula. It is a tool that requires practice and careful observation to master. Impulse waves are the driving force in a trend. They consist of 5 subwaves. Wave 1 is the initial push in the direction of the trend. Wave 2 is a corrective pullback. Wave 3 is typically the strongest and longest wave in the sequence. Wave 4 is another corrective wave. Wave 5 marks the final push in the direction of the trend. Corrective waves are more complex and can take on various forms. They typically consist of 3 subwaves, A, B, C. These waves correct the preceding impulse wave. Corrective patterns can be challenging to identify as they are less defined than impulse waves. Understanding the characteristics of each wave and its relationship to other waves is crucial for accurate Elliott wave analysis. This knowledge can help traders identify potential trading opportunities. Tradingview is a powerful charting platform that offers a wide range of tools for technical analysis, including Elliott Wave tools. To use the Elliott Wave tools on Tradingview, simply select the Elliott Wave tool from the toolbar and apply it to your chart. The tool allows you to manually draw and label Elliott Wave patterns. You can adjust the wave counts and labels as needed. Tradingview also offers several Elliott Wave indicators that automatically identify potential wave patterns. While these tools can be helpful, it's crucial to remember that Elliott Wave Theory is subjective. Different analysts may interpret the same chart differently. Therefore, it's essential to combine Elliott Wave analysis with other technical indicators and your own market understanding. Mastering Elliott Wave Theory takes time and practice. Here are a few tips for beginners. First, start with the basics. Focus on understanding the basic principles of impulse and corrective waves. Learn to identify these patterns on historical charts. Next, use multiple timeframes. Analyze charts using different timeframes to gain a broader perspective on the market trend. Third, combine with other indicators. Use Elliott Wave analysis in conjunction with other technical indicators like moving averages, oscillators, and candlestick patterns. And finally, practice, practice, practice. The more you practice identifying Elliott Wave patterns, the more comfortable you'll become with the theory. Remember, Elliott Wave Theory is not a foolproof system. It is a tool that can help you understand market psychology and anticipate potential price movements. Always manage your risk and never invest more than you can afford to lose.